Okay, so under the allowance method where we're estimating these allowance for doubtful accounts, one of the methods is aging for accounts receivable, aging of accounts receivable method. This method is also sometimes referred to as the balance sheet approach. And the reason for this is because the calculation that we're going to do focuses on the accounts receivable balances. So what is sitting in accounts receivable? But in addition to that, we're also calculating the allowance for doubtful accounts amount when we use this aging of AR. So both the accounts receivable and the AFTA are balance sheet accounts and therefore sometimes referred to as the balance sheet approach. Okay, so here accounts receivable are analyzed according to the length of time they've been outstanding or how old they are. So we're going to look at an aging schedule of accounts receivable and look at their age, and based on that, we will calculate the amount that we think is uncollectible at that point in time. So at whatever day we're looking at that accounts receivable, at the end of each reporting period, we're looking at AR at that point in time, and therefore we're calculating the uncollectible amount at that point in time. And this means that we're calculating the allowance for doubtful accounts balance that we need to get to. Or we're calculating what we'll see is the target AFTA balance. So we think this is the amount that's not collectible at this point in time, which is what we know is what the allowance for doubtful accounts represents. So this is important to note. Okay, so let's go through an example here. So this table below is what's called an aging schedule, or we looked at it earlier, it's the subledger. So it's breaking out each customer and how much they owe, but it also breaks it out into these age categories. So this is the amount or for how long it's been outstanding. So this first category is saying that these amounts have been outstanding for 1 to 30 days. So we originally booked it somewhere between 1 to 30 days ago. And then same thing as we go here. So each business will have this aging schedule, and each business needs to go through and estimate what percentage under each age range. So for each of these columns, they'll ask themselves, what percentage do we not think is going to be collected? And businesses use that past experience. So what they've found in the past is kind of that average percentage that isn't collected under each of these different aging categories. So let's think about this. As accounts receivable gets older, do you think that there's a higher or lower estimated uncollectible percentage that we would use? So the older that AR gets, that means it's been outstanding for a longer period of time. Well, with that, we have more risk. So the longer that it sits there and the longer it takes a customer to pay, the more risk that we're never actually going to get it. So the older the accounts receivable gets, the higher the estimated uncollectible percentage will be, because there's that more risk that we won't get it. So higher uncollectible percentage. Okay, so this business has gone through, and these are the percentages that they've come up with based on their past experience that they believe will not be collected. So these are those uncollectible amounts. So we need to go through and figure out what is the estimated uncollectible amount at this point in time. So we just take each of these percentages and we apply them to the amount that's outstanding under each column. So for 1 to 30 days, we see here that they think 1% won't be collected. So under this column, we can take the $60,000 balance times 1%, gets us to an estimated uncollectible amount for that column of $600. And we just do this for each of the columns. So 31 to 60, they think 2% of this $5,000 won't be collected, which is $100. 61 to 90, they think 5% of this $26,000 balance won't be collected, which gets us to $1,300. And over 90 days, now clearly this is an old amount. They must work really hard to collect their AR before 90. So because of this, they actually don't think 90% of this amount will be collected. So pretty high. So 90% times 9,000 is $8,100. So that's for each individual category, but we need to find the total amount. So we just go ahead and add each of these up. So 600 plus 100 plus 1,300 plus 8,100 equals a total of $10,100. So this $10,100, this is the estimated uncollectible amount. So right now, we're going to say this is at December 31st, 2020. So at December 31st, 2020, we have this $100,000 total balance in AR. So that's what we are owed in total. But of that, we think $10,100 is uncollectible. That's our estimate. So we talked about this. When we think the estimated uncollectible amount, we set that up as that allowance, the AFTA account. So this equals the AFTA that we want at December 31st. So that is the balance that we want as our target in the AFTA account at December 31st, 2020. But we need to ask the question, well, do we have a balance currently sitting in the allowance for doubtful accounts? And if so, we need to adjust for that. So we can continue on here. So the customers owe us, or owe the company, $100,000. And we saw that amount right here as the total on the subledger. And it's telling us now that the AFTA balance is currently at $1,000. So from the previous year, we already have this amount sitting in the account of $1,000. So now we need to provide the adjustment. So we need to adjust at the end of the year. But first, we need to figure out the amount that we will use. So under this aging of accounts receivable, as I've said at the bottom here, we're calculating what we think the AFTA balance should be. So this is our target. It's the amount that we want sitting in that account. So if we've already got $1,000 there, we only need to adjust for the difference. So we can do a calculation here. Our target AFTA, the amount that we just calculated, is $10,100. So I'll just say quick here, calculated on previous slide. But we know we are currently at an amount of $1,000. We can see that right there in the question. Therefore, the adjustment needed is just the difference. So we need to adjust by $9,100 in order to get to our target. So when we do the entry, we're going to debit bad debt expense, because once we don't think we can collect it, it becomes an expense. and we're going to credit the allowance for doubtful accounts. Because this is our estimate. We don't know specifically which customer won't pay. We're just estimating based on the total AR at each age. Therefore, we use the contra account, allowance for doubtful accounts. Okay, so it's important that we're noting here aging of accounts receivable. We don't use the amount that we calculate as this AFTA. We don't use that in our journal entry because we're taking into account what's already sitting in that AFTA account. So once we do this entry, it allows our net receivable to reflect the amount that we actually expect to collect. So if we quickly update some or have some T accounts here, our accounts receivable we know was at $100,000. And the allowance for doubtful accounts, it was at $1,000 from the previous balance. And then we added in the $9,100 in that entry to get to $10,100. And again, this is the target that we calculated. So that's what we wanted. We weren't adjusting for that $10,000. We were trying to get there because that's what we didn't think was collectible. So on the balance sheet, we would see AR of $100,000. We would say less the allowance for doubtful accounts of $10,100. Gets us to our net AR of $89,900. So that is the balance sheet side. But let's say we do this entry, we only do it once a year. So this is the entry booked at the end of the year for December 31st for the year of 2020. So this is the balance sheet side, but on the income statement, we would have our bad debt expense. So this entry was the amount that we booked. We debited that for $9,100. So that would be our bad debt expense for the year. So that's also something to be careful of when you're doing the aging of AR method, is you could be given this information that you see here. So you're given the aging schedule and the percentages that are estimated. And then the question might ask you, what is the bad debt expense? So you do this full calculation. That's your first step. You get to the $10,100. But make sure that you're considering what balance is already in allowance for doubtful accounts. Because we calculated the $10,100, but our bad debt expense for the year is only the difference. It's the amount we actually book in the entry. So be careful of that and knowing what the question is asking. Okay, in our next video, we'll take a look at the percentage of accounts receivable method.